In this video, traders, we're going to look at aggressive trading versus defensive trading. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so aggressive versus defensive trading. What's the difference between the two? How do we determine if we're trading aggressively or defensively? And what does it actually mean? First of all, I want to point out that we've got kind of a spectrum here, or a scale. At one end of the scale would be very nervous, cautious trading not to lose any money. So, I'm going to tight stop, really small size, snatching at profits. That's never going to work. That's not defensive trading. That's trading that means you're going to lose, because you have to still accept risk. The ultimate defensive to not trade at all. So you have to accept risk. And we've got the other side of the scale, other side of the spectrum, if you like, which is saying, hey, this is where I'm just literally lobbing around maximum size with no regard for my setup or strategy. Neither of those things are actually trading. They're not any useful. We're talking about the kind of bit in the middle. We've got a normal distribution curve. It's that middle point, stuff to the left, stuff to the right, forgetting the stuff at the very end. So we've got defensive, we've got aggressive. Most of the time, we're going to sit in the kind of neutral environment, right? We're going to be trading normally. We're going to be risking a little bit, risking a little bit less, trading a little bit more actively, trading a little bit less actively. But sometimes we're going to step out and really kind of go, right, I need to be cautious. I need to trade defensively while still trading. Of course, the decision is to not trade at all versus that. And the other side of the coin is, hey, I'm going to trade aggressively. I'm going to really put the throttle down. So let's have a look. So we've got some of the things would be aggressive on this side, defensive on this side. So aggressive traders adding to positions, defensive traders scaling out of position. So as a trade goes in your favor, an aggressive trader will be adding more size, more size, more size, more size, so they're in as much size as they possibly can for that final bit of the move. Defensive traders will be scaling back the size. So as the market goes in their favor, taking some off, taking some off, taking some off, taking some off. So you can see the difference. The difference is that I'm not sure about this. I'm a little bit cautious. I want to make sure that I'm paid for taking the risk. The aggressive traders, like, I've got the conviction, I'm prepared to take the risk, I want more risk, I want more risk, I want more risk, I want to make sure I'm in size for this move. The other one would be trade more size versus trade less size, so just literally physically trading more contracts versus less. Of course, within the parameters of your risk tolerance, again, we're not going onto the edge of it and just slinging around as much size as we possibly can. We're still within our risk parameters, but maybe we're trading, twice as much as we normally would, or 3 times as much as we normally would, and we're accepting the risk with that. So it's just literally a size issue from the start, as well as talking about from the scaling perspective. And the three guys are trading more setups, or being more picky, or be more picky about trades. So this really means that, okay, if you're trading aggressively, you're taking many setups. The market's really conducive to the way you trade, and every setup that kind of comes up, you're taking it. Like, yes, 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 yes. And you're not very strict with your criteria. You just see something that's close enough and you pull the trigger. And that's far more aggressive than a defensive approach, which would be being more picky, saying, listen, this is the exact level I want to trade. I'm not going to start chasing stuff. If the market comes and hits my level, it's a perfect setup for me. The stop's perfect, the risk reward ratio is perfect, the setup's perfect, etc. The candle shape is perfect, whatever it may be, and in your eyes, perfect. Of course, there's never perfection in trading, but in your eyes, with your plan, it's perfect, as opposed to being more looser and saying it's close enough. I don't need to wait for the counter close. I'm going to hit it. It's not quite pulled back right, but I'm still going to hit it. That's a bit more of an aggressive approach. Again, got to be careful, guys. We're not going into the kind of realm of just trading without any strategy, and that's not going to work at all. So we're still kind of sticking within the boundaries of the strategy, but being a little bit more looser, perhaps, with the rules. Risk less and risk more. So again, this could be down to size, or it could be down to holding on for a longer position. In fact, this is it right now, is it having use more leverage or use less leverage. So you might have the same amount in your account, and this kind of comes with the risk less, risk more, but you might be saying, well, I have more leverage available to me. I'm going to use it because I'm going to leverage, no pun intended, on the opportunity to really increase the position size. The opportunity is there, the market's right, everything's flowing nicely. Then why don't I use that to my advantage and risk more? Yes, it might not work, but ultimately, if I keep the risk managed, I can use the tools that's being provided for me, have more margin available. But that's obviously a conscious decision you've got to make, not being reckless with it. I'm just saying, hey, maybe it's time to dial up size. I've got some kind of slack there that can be taken up. There's some more leverage available to me. The margin's available. Let me trade a little bit more size. So it comes in with this more size, but using leverage as opposed to adding more capital, if you like. So the final thing I've got for you guys is have firm price targets versus a broad theme. So defensive trading, that's probably why you'd be defensive anyway. You've got a broad theme of how you're trading. you're basically saying, well, you know what, I think the market's kind of drifting to the upside here, and I want a position for that. So maybe, you know, as it starts to rotate down, maybe it double bottoms, maybe it kind of stagnates at lows, you'll be adding some to there and looking for the market to push higher. You don't really know where it's going to go, but you've got that broad theme, versus an aggressive trader would like, listen, the market's going to fill the gap. The market's going to test the prior day's high. The market's going to test all-time highs, all-time lows, whatever it may be. You've got a firm belief and many reasons for kind of having that belief. And again, this is not stupidity, if you like, and just being stubborn. It's having evidence to back it up. But rather than then kind of this, you can see why you'd start scaling. He's like, well, I've got a theme. I don't know where it's going to go, how far it's going to go. I think it's going to go up, you know, but it's already up enough. Do I start to scale? Whereas an aggressive trader's like, listen, it's going to hit that high. I've still got this more to go. I'm not touching it. I'm not scaling out. I have conviction that we're going to go there. Again, backing up with evidence and all this other stuff. But you see the difference. The difference is that you're holding on. You want to be rewarded with the full position. If you're right, you're going to hold it right to that level, as opposed to, I'm not sure where it's going to go and I'm going to scale out of it. I'm just going to kind of scale as it goes in my favor, and here's my stop. So those guys are some aggressive versus defensive trading methods, if you like. Let me know your thoughts on that in the comments section below. Do you trade aggressively? Do you trade it defensively? I think there's a time for both. I guess the question would probably preempt the question that's probably going to come in the comments from you guys who are very astute watching these videos. You know, you ask great questions. When do you trade aggressively versus when do you trade defensively? My quick answer to that would be you trade aggressively when the market is really in tune with your strategy. That's been great from those stuff. You want that volatility expansion. You want that aggression. And when you have that, you're probably going to be trading more aggressively, trade more size. You know, your filter's going to be looser because you have the underlying movement of the market to support you. Defensive trading might be, okay, well, you know, I'm going to trade a little bit lighter. We're not really in that aggressive. We are kind of moving a little bit, but we're not really as aggressive as we could be. We're not really kind of blowing out of ranges as we have been before. So yes, I'll trade, but I'll trade smaller. The market's not quite in tune with how I prefer to trade. So I'll trade smaller. I'll trade more sensibly. I'll scale out of positions. I won't be so, you know, angry, or angry is wrong, aggressive is probably the right word, with the trades. So it's looking at the market, comparing it to how you like to trade, to your setups and strategies, and the success you've had at the moment as well, and going, right, I need to dial it back, I need to be careful, or I need to dial it up. This is an opportunity not to be missed, and working out which one's the right one for you in the current conditions. Whatever you're doing there, guys, keep your risk managed. I'll see you later. Bye-bye.